This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hello and welcome back to Invest Like a Pro. So we want to look at the S&P today, and I'm going to go in depth on the S&P. I'm not sure that I'm going to have time to really look at other indexes, but that's okay because there's something specific I want to talk about after I go through the analysis. I want to make sure I cover this and really what it is. If you stick around for this and watch the whole video, I think you'll see that what I'm looking for, I think will make a little bit more sense, and what the tradable time frame is and what the trigger time frame is, and how where you have to go to find that. So I wanted to bring this up because I think based on where we are right now, it's somewhat important with respect to the market. So let's go ahead and get into this. So I've kind of labeled these time frames just so you can see where we stand. And I'm going to start with the monthly. We can see we've got we have a strong uptrend, and I'm referring to it as a strong uptrend because both MACD and ADX are confirming. Green DI is hitting new highs with price. We have a rising ADX above 25. MACD is hitting new highs. This is pretty strong. But we're extended away from the 18-month, which we have been for a while now. And so those are the two conditions that I would be looking at, is that this is in a strong uptrend, but it's overbought. So the ideal situation is for this to pause, take a breather, something like that. It maintains a strong posture, but it would work off or alleviate this overbought condition by pausing or pulling back. That would be the most ideal scenario for this time frame. So we know we have that as our backdrop. Let's go look at the weekly chart, and I'm going to go ahead and zero in a little bit. So I'm referring to this as a weak uptrend. And if I had the market conditions up, we'd have, a positive trend and a negative momentum, right? So that momentum condition might be considered more neutral now because of the way this is playing out. We've come down so hard on this MACD that we're making a lower low here, and yet the price is actually making a higher bottom. And so we've got this higher bottom forming in price and lower bottom forming in MACD. So we are in a reverse divergence position that follows divergence, which isn't as strong as where you go to a new high in MACD and then give this divergent signal, but you still have to classify it as a reverse divergence. What's bugging me about this one is this down here. I mean, this isn't the kind of quality you want to really see for a stock that it looks like it's getting ready to go up. I mean, not really. And not to mention the fact that we have this divergent pattern leading up to the red DI taking over. So not considering this to be a quality setup on this time frame. Now the trend is up, and the reason is because the 18 is rising above the 40. So I can't call this anything but up. Even though we break, and this is a very important distinction, we did break the trend line. You can draw your trend line in, draw any trend line you want. We broke it. We also broke the 18-week. Even though we did it in a very minor way, we did break it. It constitutes a violation of that line. But because there was no follow through, we didn't cause that line to roll over. If we roll that line over, I think that changes things a lot. It turns the trend more neutral, and it puts it in a little bit more vulnerable position. Now, for this to get vulnerable, I think what's going to happen is we're going to have to come up and test. I wouldn't consider what we've done so far a test. We probably need to rally a little bit more, and then for this to come back down through this moving average, which is maybe flattening out. And if MACD were to rally up and not get through the signal line, we'd have basically an underpinch with a couple bar rally here. So we want to be on the lookout for that. Even though this is a reverse divergence, you have to, because of the weakness prior to that, this divergence ahead of it, we have to look at this more like a trading play. This reverse divergence is more like a trading play. So I wanted to give a lot of detail on this because it's kind of complicated. There's a lot going on here, and you need to recognize, we have a reverse divergence, but because the ADX is not in that great a position because we violated the 18. We broke the longer term trend line. We have to be, and the fact that the volatility is up. See, the volatility being up tells me that the chances are that this might spend some time consolidating or quieting down before we're ready to do anything meaningful. If, in fact, it's not just a quiet down, it's actually turning over, it's going to come up and test, and it might actually go to a minor new high and then turn back down. Then we could get into something that's a lot more, I think, frightening. So we don't have a complex top pattern. We've broken the trend line. We've broken the 18, but the lines are still rising. So I'm still constituting in an uptrend, but very weak. Okay, so I want to make sure that was covered. Now, it gets even more complicated as we go on to the daily chart. So this trend I'm calling neutral, and it has negative momentum. And so I've actually put this dotted line here to show the trend line break that I mentioned last week. We still had a declining 18 at that point. And I was saying I'd feel a little bit more comfortable about the trend kind of solidifying or being a little bit more solid of support if the 18 would turn up. Well, that happened today, on this move today. What also happened is we broke the trend line. We came back and tested this low, and then we went to a new high. So we took out that prior high and closed above it. So you have a 1, 2, 3 going back up. Now, this is the most important thing that I'm going to talk about today, which is when you have high volatility, when volatility is going up, your source, your price, is going to move the quickest and give you the quickest signals, even faster than the moving averages. And that happens in a high volatility environment. Okay, when we have a normal volatility environment, your signals like your 1, 2, 3s and your moving averages will give you signals almost identical time. Like we saw on the way down, the volatility hadn't quite kicked in yet. When we turned negative and this crossed here, that was basically when the 18 and the 40 were crossing to the downside. But if you see what's going on now, we got a very fast 1, 2, 3 sequence going back to the upside. And it doesn't coincide with the moving averages. It doesn't coincide with any kind of, well, you got back above the signal line, but you're still below zero on a MACD basis, and you still have negative ADX based on what's taken place on that rally, on this decline and the rally back up. It hasn't really changed that. Now, what is taking place is we've made a higher low in green DI, and now we've just made a higher high. So we're starting to converge, and this hasn't quite, it's very close to taking out this low. And so we have one more day this week. We'll see how Friday does. If this actually comes down and takes out this low after this takes out this low, this high, then we're getting back into kind of a contraction phase. And so that could be confirmed very quickly, maybe tomorrow. And if that's the case, then we have negative momentum because of this ADX reading, but we're going into a contraction phase. The rally's strong enough. MACD's rallying up, probably up towards the zero line. And we probably should be thinking in terms of a move back up towards, let's find the rectangle. I think we're going to head back up towards this zone up here. I don't think, based on the conditions in place, if you look at the weak trend that the weekly is in, and you look at what's taken place with ADX and the fact that the MACD is below the zero line, it's a serious overrun and really more of a break of the zero line, then I'm not expecting this to turn back up and break through this resistance. So that's how I'd be seeing this. I think we're going to form a trading range right now. And what you want to do is we've actually made a, so we rallied up and then we pulled back and we made a higher high. So we have now, we can put a trend line in place on this daily chart. So we want to keep following these lines, right? We broke this, first we broke this trend line and we started down, didn't last very long. Now we've broken this trend line, now we're turning up. So now we have a trend line in place here. Well, as long as this trend line stays in place, then the bias is to the upside, but it's not a really powerful bias, okay? This is how I want you to think about about analyzing this stuff. So we're currently kind of moving upward. We have a slightly upward bias, but the trend is neutral because we really don't have the moving averages in the right position right now. I mean, we're coming up on a 40 that's still declining. Yes, the 18 has turned up, but I consider this more of a neutral pattern based on that. The price action has told us that things are improving, but without the moving averages, I would not expect a monster move to the upside when momentum is bearish, okay, on two different time frames. So let's get through. Now we have the hourly chart. So let me get rid of this moving average, because one thing I wanted to show on the hourly, so this is a neutral trend because we came down here, we moved up, and we have gone to a new high, but we don't have the moving averages quite in position. Now, early tomorrow, this is going to be in an uptrend. Okay, and we already have good momentum conditions because ADX is rising strongly with green DI breaking out, and we have a nice move in the MACD. So we already have bullish momentum characteristics. All we need is a mild pullback here and this moving average cross. We already have a rising 40, so it really would not take very much to turn this confirmed positive. It is more neutral just based on what's taking place. But one thing I wanted to point out, when we turned up, I had drawn this trend line in last week. Now, if this would have happened, if we would have come down, we came down here, if we would have gone to a new high, then I would have been willing to shift the trend line to the upside and done that. Okay, and then this would have subsequently been a break of the trend line, but we didn't have that. So while that's in place, you just leave this in place and look at what happened when it came down and ended up finding support right at the same level. Now we've moved up to the upside on this time frame, and we have momentum in place. So we're getting very close to turning the hourly time frame into an attractive pattern. I don't have a setup on the weekly. Well, I definitely don't have a setup on the monthly because we haven't pulled back. We're going to need to pull back closer to the 18 to have a pullback. I don't really like the setup on the weekly. Yeah, we're pulled back to a rising 18 week, but I don't like the momentum conditions in place. So I would not play this using the daily. We can't play the daily into the weekly because of how weak the momentum is on both time frames. And I can't do a weekly and daily right now, because the daily chart isn't in an uptrend. It's neutral. So I can't skip that and just say, okay, I'm going to buy off the hourly chart and ignore what's going on here. I can use this time frame to kind of frame out where resistance is, which I think is up around 450. And then what I want to do is go to the hourly, look for the setup, which would be a mild pullback here, and these lines moving up and crossing, and this 80. If this ADX is rising, we won't even pull all the way back to the 18 MA. If it does turn down, then we'll probably get a pullback all the way to the 18 MA. And then when this gets in the vicinity of the 18, we're going to go down to the 10-minute. So the only time frames I can trade, and this is pretty important, the only time frames, if I'm trading this stock, if I'm looking at this stock right now and I'm saying, okay, and this is a ETF, but if it's a stock, I've gone through every single combination that I can go through, and the only one that I can trade is the hourly down to a 10. I can't do any other time frames. Go through, and if this doesn't make sense to you, let me know, because I've gone through this stuff enough that it should click for you. The only way you can trade this right now is hourly pullback, find an opposing trend trigger on the 10-minute chart, play that up to 448, 450, 451, something like that on the daily resistance. So that's how I would look at this based on everything that's taken place. Hope this makes sense. Go ahead and post any questions or comments. We'll see you next time.